The trading industry has been lying to you about a lot of things, including scalping. Now, in this video, I need you to understand I'm going to keep it very real and I'll try my best to expose all the lies. And of course, I will also show you how to do it instead. I also need you to understand that I'm talking from experience here. I've seen it all. I've done it all before. I want you to learn from my experience so you don't have to make the same mistakes that I did. This will be a full scalping guide. Now, first off, I want to go over what not to do. And then afterwards, I want to go over what you should be doing. Both parts are really important. Now, the way people approach scalping nowadays, they go into the market and they just let them guide by their intuition. So they're fully in their emotions and they go into the 1 minute and they say, all right, we have one fair value gap lower right there. We have fair value gap, small fair value gap lower right there. So that should eventually go lower as well, right? And it takes stop loss after stop loss after stop loss after stop loss because they don't understand how to scalp. Yes, you are indeed scalping when you take a trade off of one of these fair value gaps right here because you're getting in quick and you're getting out quick. But if you're just taking trades by diving into the 1 minute and taking a trade off of every 1 minute fair value gap and you're letting the 1 minute guide you, then ask yourself, is that truly beneficial for you? Are you truly benefiting off of that? And be honest with yourself. Because I don't think you are. A lot of people are scalping because they think scalping is more trades equals more money. The people that make the most money in this industry, they don't scalp. They let the capital do the heavy lifting for them. Now again, I'm not trying to discourage you because if you truly like scalping and you're very good at it, perfect, do it. But usually people are scalping for the wrong reasons. Nowadays, it's a trend to scalp. And humans are just trend followers. And I don't mean trend followers as in the market is going higher or lower. No, they follow the trend as in this human is doing that. So I guess I will also do that. They just follow the masses. Let me tell you, the masses are extremely unsuccessful, most of them. So what this whole channel, what this whole YouTube channel is also about, we are not trying to do the same things that other people are doing because clearly that isn't working. We are focused on making money. Very important. Again, why do people usually scalp? Because they think you work harder because you have more opportunities potentially if you're using the 1 minute. Then of course there's going to be opportunities everywhere. And then they think because you have more opportunity, so you must make more money, right? Let me tell you, working harder in trading does not equate to making more money. It's the opposite world in trading. Less is more in trading. That's just a general rule of thumb to go by. When you're doing something, always remember less is more. In trading, especially in trading. In trading, you need to understand you will not get rewarded by someone that is higher up than you that will tell you, wow, you worked so hard today. Maybe you lost a lot of money, but you worked really hard. Great job. No, you need to understand here it's less is more. So working harder in trading does not equate to making more money. And again, with working harder, I'm aiming at trying to find the most opportunities during one single trading day. That is absolutely detrimental. Then I also need you to understand that scalping is very fancy. For all the reasons I just stated. It's very quick action. It's like you can compare it to TikTok and YouTube. YouTube, you'll likely learn the most, but it's not the most fancy, right? TikTok, where you have a 5-second video, you'll likely not learn that much, but it is very fancy. So again, if you want to be a scalper, you need to be a scalper for the right reasons. That is very important. If you're a scalper just mainly because everyone does it, or the bigger reason, and people think scalping makes the most money, which is absolutely the furthest thing from the truth. It's garbage. It's not true. And usually that is why people get into scalping. Now it's funny because I have a scalping guide here and I'm absolutely annihilating scalping here. But I need you to understand that the reasons you are scalping need to be absolutely correct. Because a lot of people are just going into the 1 minute time frame and they take every 1 minute fair value gap without any reason behind it. And they try to argue with the point, yeah, but I don't need a daily bias. Do you really not need a daily bias? Again, if you're trying to follow some algorithm and you know the algorithm is mainly controlled by orders on the higher time frame, so that is 4-hour daily, weekly, and monthly, then who are you really fooling? You're fooling yourself by saying that you don't need a daily bias, because you do. And if you truly are convinced that you don't need a daily bias, then I would ask yourself, are you truly benefiting off of the fact that you're not using a daily bias, or are you just being lazy and you don't want to put in the work? Because most of the time it's the latter. where people are just lazy and they don't want to put in the work because it's too difficult. Yes, of course it's difficult. You thought it was going to be easy? You thought being rich and having freedom in this world was going to be easy? Of course not. That's what makes it fun. The reward is so fun because it takes effort. That feeling is so fulfilling. So that is very important to understand. Then how can we scalp? First off, we need to understand some kind of daily bias. Now the daily bias I'm going to be using, as you may have already seen, is the exact same one in the previous video. So in the previous video, we went over daily bias. If you've not seen that just yet, finish this video and afterwards watch that daily bias video. It's the previous A to Z guide episode where we mentioned, all right, this fair value gap is not strong, right? It's not a strong fair value gap right there. Then this fair value gap is likely a strong fair value gap, because if this is not pushing price higher, that fair value gap, then what will push price lower? This premium rate in the form of that fair value gap. In between those fair value gaps, all you're doing is you're finding the high probability price action. So you're looking at the stronger fair value gaps. Which fair value gap is stronger here? This fair value gap is weaker than that fair value gap. So this is the stronger fair value gap, right? What you're doing between this fair value gap and that next target right there, you're letting the 1 hour guide you. The 1 hour is your guide to your next target. So constantly you're letting the 1 hour guide you. In that 1 hour price action is what I will show you. You're taking either 1 minute entries or 5 minute entries. Now, to show you why you still need context and why you still need to be able to read price action on the higher time frame, if we dive into this piece of price action right there on the 1 hour. So here we are, here we have the weak daily fair value gap and we have the strong daily fair value gap sitting right there as well. Then this price action, what you would be doing, you would be looking at structure based on the 1 hour. So now you would be using time to your advantage and ideally as well news, but that is an extra confluence. The video we talked about how you can use the news drivers to know which day will expand, etc. That is an extra confluence. So time into a PD array and there you look for your confirmation. Now, if we have a weak fair value gap and we don't have clear context right there, because this is a weak fair value gap, we're not really bullish, we're not really bearish, then what is happening? We take this order block. When we dive into the 1 minute, what will you see? You'll see here that when coming into that discount rate, that order block on the 1 hour, that we will take a lot of losses right there. Why? Because the context is not supporting the ID. That is why when you're just taking random 1 minute fair value gaps everywhere, that will not be sustainable on the long term. Why not? Let me tell you. If we zoom out back onto the 1 hour time frame, what will we see? We will see that high probability price action, for example, when coming off of this strong daily fair value gap right there. This pushes price lower in a very short amount of time. In what is it? 1 day and 16 hours. This fair value gap right there did what? It took about 5 days and 18 hours to push price higher. Low probability conditions will last way longer than high probability conditions. So for scalping, it is very important to also identify the high probability conditions, especially when you're on the lower time frame, like the 1 minute. Because on the 1 minute, you can extremely easily blow an account because there's always a reason to justify a trade ID on the 1 minute. The entries will all look the same. What is the difference between one 1 minute fair value gap and the other 1 minute fair value gap? It's what happened before that. It's the boundary that needs to get hit first, and then we have the 1 minute fair value gap. That is where you want to enter. So let me show you what I mean with that. If we have no boundary, like I just mentioned, and we go into the 1 minute time frame, then we can take every 1 minute fair value gap as an entry. Does that mean it's a good entry? Absolutely not. What is the boundary that happens before that? That is what differentiates a weak 1 minute fair value gap from a strong 1 minute fair value gap. There needs to be a boundary before that. The boundary is a 1 hour PD array or a 15 minute PD array. Again, when coming off of ideally a daily fair value gap or a daily PD array. So first off, you need to have the daily somewhat agreeing to your idea to go into the 1 hour. Because what we just saw is that if we have the 1 hour agreeing right here, but we don't have the daily agreeing. So right here, we have the 1 hour agreeing going higher, but we don't really have the daily agreeing. It's not really a strong fair value gap. Then we will take a lot of hits before we get the right move. And that is very dangerous in scalping, because in scalping, like in the industry, they show you all the wins. But if we took every 1 minute fair value gap that was sitting right here, we would have taken 10 hits before we get a win. And that one win, yes, we can brag about it on Instagram, on Twitter, whatever. And that's usually what people do, but they don't tell you, or they forget to tell you, quote unquote forget, about the 10 losses that they took because they were identical. When you have 1 minute fair value gaps that are identical, which one are you taking? You need somewhat of a guideline right there. And the guideline is whatever happens before that. So a 1 hour PD array in context of your daily bias. Again, remember the daily bias, respecting and disrespecting, etc. We established on the daily time frame here, weak fair value gap, strong fair value gap, respect because we are wicking. Next target could be that daily discount array in the form of that swing low right there. So that is our context in between that high and that low right there. That is where we want to get involved ideally because we have high probability price action right there. Then if we go into the 1 hour, we need the 1 hour to show fair value gaps lower to agree with the idea of going lower indeed. Right here, this is the next day. We have a new fair value gap. So first we respected that fair value gap based on the daily time frame. Now we have a new day right there showing a new bearish fair value gap. Inside that fair value gap, that is your 1 hour PD array. That you will use to go into the 1 minute to now scalp. Now, the reason I say you can also use the 5 minute, usually what people think is going into the 1 minute means that you are scalping or going into the seconds time frame, etc. What if I tell you, you can make it easier for yourself and the 5 minute you can achieve the exact same entry as you would have taken on the 1 minute, maybe even a better entry, but the 5 minute usually isn't fancy enough for people. The 5 minute you can achieve the exact same entries and it would still be scalping. Let me show you what I mean with that. If we dive into the 1 minute on that 1 hour fair value gap right there, then once we are here, what do you want to do? You want to wait for your ST and then you want to wait for your new fair value gap lower, which once we have an ST right here, then we have a new fair value gap lower right there as well. That is where you can place your entry on the overlapping part with those lows there as well. And you cover, what do you cover? The intermediate term high, that is right there. What do you target? Well, since you are scalping, you have a close target. You get in, you get out. So ideally at first a 1 to 2. A 1 to 2 is perfectly fine to target at first. So somewhere around there, perfectly fine. And again, you don't need to do this, right? Because you could have also very well done a real scalp where you now enter off of this overlapping part because that is also already valid. You cover the fair value gap and you target a 1 to 2, a 1 to 1 right there, a real short scalp. As long as you have that context and it's not a random 1 minute fair value gap or 1 minute order block right there. You need to have the context of the time frames above it. Otherwise, you will get burned. But let me show you something even more beautiful. If we go into the 5 minute on the exact same piece of price action. So again, this is the 1 hour fair value gap. And we just use a 5 minute ST. Then right there would have been the exact same entry, but even better. And then right there, you have your 1 to 2 already. You can't convince me that that is not scalping. Because this reached your take profit. You get tagged in and in the next candle, it reaches your take profit. That is the same as scalping. And I would argue even better. Because it's higher probability, you're not taking random fair value gaps, etc. Again, you can see that when I talk about my plan, everything that I do is fully fractal. I mean that. Because this in the previous episode was also just a 1 hour entry. And based on the last hour trading plan, it was also just a 1 hour entry. This could have been a swing trading plan entry, could have been a scalp, could have been a day trade. It's whatever you want it to be. Then after a 1 hour PD array has been reached, then we can go potentially into the 15 minute because then the 15 minute is also leaving behind something most likely. And right there on that 15 minute fair value gap overlapping with that order block, what do we have? We have a new PD array to work with, aka we have a new boundary, a new reason to go into the lower time frame to scalp. So when we go into the 1 minute based off of that 15 minute fair value gap, you'll see that right here, you don't need a lot of confirmation to work with because 15 minute and 1 minute, they are closer to each other. When you're using a 1 hour PD array, you would need more confirmation based off your 1 minute time frame. You have a bigger PD array, So you have more candles to work with the lower the time frame. 15-minute PD ray, 1 minute ST is enough. So right here, that could be your entry. Intermediate term high, target a 1 to 2 right there. And again, how long did it take you from that candle to that candle? 17 minutes. Is that not scalping? Again, are you in the edit right here? And that trade took you 17 minutes to hit take profit. But it took you a couple of days to wait for that trade to happen and to play out. Waiting for that high probability conditions. That is where scalpers will mess up. And every trader in general will mess up. Because in unfruitful price action, for example, this, waiting for that high probability scalp right there, that is where they will already blow the profits, already be in drawdown, already blow the account. And that is exactly what I'm trying to tell you. That scalping does not mean that at any time of the day you go into the 1 minute time frame to take a trade. The 17-minute trade happened at that 15-minute fair value gap right there. And you wait for the high probability price action, which means you probably waited a couple of days before you got to that high probability price action. And then you can scalp. Scalping is not getting involved every day, every session, every minute. And again, like a great investor once said, the stock market is a device for transferring money from the inpatient to the patient. That is the exact same thing with trading. Perfect. Let's continue. So again, that could be a second entry in the same exact London session right there. Then if we look at the following day, what do we see? Because on the next day we have NFP. And again, NFP, when you're scalping, is beautiful. And let me tell you why. Usually it just follows along with what the higher time frame was already intending to do. What do I mean by that? Our daily bias was already bearish coming into that NFP day. So when we see a huge spike higher, that is perfect. Because remember what we're doing at scalping. We're having that PD ray or any PD ray which we sting into at the right time. So that is a kill zone or that is news. When you have that and you see an entry pattern right there at that moment, that is where you want to get involved. So, for example, news stings into that 1 hour order block with that fair value gap right there. Our daily bias was still bearish. We had no reason to go higher from this level right there. So right there, if we go into the 1 minute again, then we can see we now have a boundary to go into the lower time frame because we tapped into that 1 hour PD ray with at the right time. And again, you need to understand, you're not trading NFP itself here. You're not executing on NFP. You wouldn't do that. You wait for NFP to show where it's going. It stings into a certain PD ray, and then you just wait for your entry pattern after the NFP release. That's the same for CPI, FOMC. So we have an ST right there. Then we have a new fair value gap right there. And we only sting into the first fair value gap again right there. You could take an overlapping part as well, depending on your trading plan. Do you want to choose just a fair value gap or always an overlapping part? Make a choice. Pick your poison. Then you cover again the intermediate term high right there. And you again target a 1 to 2. Now again, you can see the same exact thing what we just saw on this entry to the left right there. This entry is not that great, to be honest. So again, what you could do and what I would advise is you just take a 5-minute ST instead of using the 1 minute right there. And you just take a 5-minute ST off of that move right there. And then again, same premise. If we leave behind a 15-minute PD ray, ideally a 15-minute fair value gap, then you want to use that 15-minute fair value gap to act as a new boundary to then go into the 1 minute time frame again. And this right here is how you scalp in the right way. And the things you need to avoid doing. Those are probably even more important. So again, you still need context. Even if you scalp, don't be lazy. If you're lazy, you will get left behind. Your competition will outwork you. Don't worry. In this video, you can see how I basically debunked all the hype that we have nowadays. All the concepts that are taught in this trading plan. It's everything you need. More fancy does not equate to making more money. So you won't see me coming out with the new best concept and this will give you a 100% win rate. Yes, don't get me wrong, I can be clickbaity, but I truly want the best for you and I can see through a lot of bullshit in this industry. And then as well, of course, our slogan, are you here to figure out an algorithm or are you here to make money? more knowledge on a certain algo does not equate at all to making more money. Please have that at the top of your desk, in front of your monitor, wherever you want it. Have that somewhere, because whenever you get distracted by someone telling you the algorithm is now doing this, that, you don't need to know that. Always focus on making money. Stop trying to chase 100% win rate by figuring out some kind of algo, because you can either get left behind whilst others are just making money very comfortably, or you can spend your entire lifetime trying to figure out an algorithm, which will truly not benefit you that much. If you do want more insights, again, go take a look at ario.io. There I have my mentorship and I have a newsletter. It's a completely free newsletter where I share very personal insights into trading as well. And of course, if you haven't seen the daily bias video, which was the previous video of the A to Z guide episode, you can click on it here right now, and I highly advise to watch that. Remember that I'm rooting for you. I want the best for you. And I think you came into trading for either one of the two reasons, freedom or money. And that's exactly what I'm trying to teach here. Again, I believe in you. All right, perfect. Thank you.